Stéphane Olé. Stéphane, good morning.
Good morning.
Let me take 1 or 2 minutes just to introduce you, although you need no introduction. So it's my great pleasure to introduce Dr. Stephen Ingbis, the governor and executive chairman of the board of the Riksbank. He has been at the helm of the bank since 2006, and prior to that, at other top economic positions at the IMF and Ministry of Finance of Sweden. Stephen is an icon, considered by many as a thought leader in macro, monetary economics, and financial systems. Stephen is a well-known speaker, and as the saying goes, when Stephen speaks, people listen. Sweden is clearly one of the most advanced countries in terms of digitization of the financial system, and much of this progress has been done under Stephen's leadership. Stephen will start with his remarks, and then I will chime in with some questions. So without further ado, Stephen, the floor is yours, or the microphone, that is.
Well, first of all, let me thank you, Governor Yron, for inviting me and giving me the opportunity to talk to all of you this morning. It's an honor for me to do so, and you have told me when we have met in the past that you try to follow what we are doing in this field, and I will give your audience some insight into that this morning. But at the same time, given that you are also very, very technologically advanced, we take on our side a keen interest in what you are up to and where you are heading on the Israeli side when it comes to payment structure. I think that many central banks nowadays basically have come more or less to the same conclusion when it comes to what happens in the payments market field. And the conclusion is simply that we cannot, or maybe we should not, sit passively and watch what is going on. We actually need to get involved in order to influence where we are heading into in the future. And this morning, I'm going to touch on three challenges that we have, and three challenges that come back again and again from many central banks in different corners of the world. The first one is the declining use of cash in physical cash in society. The second one is network and scale effects once you have gone digital. And the third one is cross-border, and not only cross-border, also cross-border and cross-currency payments. So let me start by saying a few words on the marginalization of cash. And I'm talking about now the marginalization of cash for retail purposes. I mean, different countries are, of course, at different stages when it comes to what I call the cash cycle. But the direction is pretty much uniform and unambiguous. More and more, when it comes to payments, this process has accelerated. And let me give you a few numbers from my own country. Back in 2010, cash accounted for about 40% of all point-of-sale transactions. By 2016, this share had dropped to 15%. And now we estimate that cash is used for less than 10% of those payments transactions. And we feel quite convinced that it is not going to stop there. Now then, of course, that raises the issue. Is this really a problem? Maybe, maybe not. And if this happens, how do we think about payment systems and efficient payment systems? Well, basically, the problem is that cash plays a much larger role in society than is indicated by its actual daily use. In today's digital world, we tend to forget how cash serves as a monetary anchor. Cash is accessible to all of us and can be exchanged, and this is the important part of it, one-to-one to commercial bank money. And for uniformity and confidence in money, this cannot be overestimated. This sounds maybe a bit theoretical, and mostly we don't think about it at all, but it is something that actually matters and matters a lot when it comes to how we have constructed our monetary system. And deep down, we also know that digital claims on private money can anytime be transferred into cash or state money in one form or the other. And this matters to the overall trust in the system as a whole. And at the Riksbank back in 2016 and 17, we realized that we are rapidly moving out of cash and moving into a near cashless society. And then we concluded that we are at a crossroads. Should we accept this development as it was, or should we act on it? And we started analyzing the various possibilities and decided that we needed to modernize our product, and our product is just cash. And also we needed to make sure that our product should be available in a digital format. And that's where we started experimenting and thinking hard about introducing an e-krona. Now, I'll talk more about the e-krona later, but let me mention one aspect of it, because sometimes people say that, well, you know, this is a huge experiment. And others have even argued that it is dangerous. And when I started talking about these things, there are central bankers who have told me, well, Stefan, can't you just tell people to use physical cash and just stop it? And my answer was, no, I cannot, because people are moving into a digital world, and then we just have to move along. And one way of thinking about this is to say the following. Most of the regulatory frameworks and the legal frameworks we have regarding money actually come from a world where everything was on paper. And many of these legal frameworks go back to the late 1800s. Now we are moving into an environment where almost nothing will be on paper. And then we basically have to move along and think hard about how we move and change physical cash into a digital format in order to roughly maintain the structure that we have had for a long, long time. And in my case, I happen to represent an institution that has provided money in one form or the other available to the general public since 1668. So I'm not taking it lightly if physical cash were just to disappear and the only type of money the general public could hold were to be private sector money. So much about that part of it, people moving out of cash into a new digital world. The other challenge we have is what I call network and scale effects. Both those effects create barriers to entry. And this is what really, really matters when it comes to payment systems, who handles those payment systems, and what the role of the central bank is supposed to be. Because those barriers to entry potentially hamper competition and innovation. And that's an issue all in itself. And I think that part of this is because digitalization has increased fixed costs and lowered variable costs. And that means that it has amplified the large volume advantage in payments. And then, of course, that raises the issue, what should the central bank do? What should the role of the central bank be? And how do you sort of divide these roles between the central bank and the private sector participants? And this is where network and scale effects really, really matter. Now, we cannot really change the whole issue of network and scale effects, because part of it is how people behave, and part of it is actually about costs and and how you set up these new infrastructure given our the present state of technological developments. But we can think hard about it on the central bank side when it comes to the structure of the system as such, and we need to think more and harder about restrictions on participation in payment systems. In the old days, we were actually quite strict when it came to allowing banks to participate in our payment system. And that produced an outcome with fairly few banks participating in the system. I'm not so sure that that's a lasting, stable solution. And we need to think more about providing competition by providing neutral back-end payments platforms. And let me give you a few examples here. When we have started thinking and experimenting with the e-krona, we have come to the conclusion that we need to provide a broadly accessible platform. One way of thinking about that is to say that when we create an e-krona, we're dealing with the back end of the system, but the front end, making it easy for the general public to use the e-krona, should be left to the banks, but also other payment services providers who are interested in participating in the system. Another example is that we have just launched is our instant payment system, RIX Inst. That system is based on the Eurosystem's TIPS platform. And a main objective of using this system is to establish a competition-neutral platform for settlement of instant payments 24/7. And we all expect this system to grow significantly over the coming years. Whether these two initiatives will actually over time solve the whole issue of scale, time will tell, but at least for now, this is our way of thinking about it. Finally, cross-border payments. That's a serious challenge under the present circumstances. Actually, when it comes to cross-border payments, the technology is already out there. But the difficulty today is actually how to move from the present systems that we have. Almost all present systems are domestic in nature in one form or the other. And that also actually holds for instant payment systems or fast payment systems, as they're sometimes called. But when it comes to cross-border payments, we have an awful lot more work to do because cross-border payments in many parts of the world are still costly, slow, and opaque. And there are even instances when cross-border payments are not at all available for everyone. This is actually a global challenge. And for that reason, we are participating in a G20 initiative to increase and improve those payments. This is a very ambitious program aiming at many problems of cross-border payments. But whether we will be able to solve every imaginable problem in this field or not, I don't know, but at least we will try hard to make sure that some improvements are made. Actually, cross-border payments is a kind of a market failure. And that's because the incumbents have really no interest in and no incentive to make these systems more efficient. And this also creates an environment where there is quite a struggle for newcomers to get into this business and introduce more efficient systems. Now, then what can we do on the central banking side? There are two parts to it. One is to show direction. What does the word show direction mean in this context? Basically, it means ensuring, if we can agree in the central banking community, that we have more standardization than what we have had in the past. And that is really, really important because, as I said, there aren't really any technical impediments to doing these things anymore. But if we cannot, or if we don't want to agree on increased standardization, then things just won't happen. And the second part of it is really saying that if the private sector is unwilling or unable to do these things, maybe we need to get involved in this in a more practical format than what we have been in the past. And that means that we need to start thinking about setting up our own cross-border payment systems in one form or the other. And when it comes to those types of systems, then basically here, this is a competitive business in the sense that now we have stable coins, a different conversation, maybe a different conference. I call them unstable coins. And then we have Bitcoin and CBDCs and all the rest of it. Right now, we are actually working together with the ECB and Banca d'Italia on a project dealing with cross-currency settlement services. And this is not a major step in the sense that given when it comes to our instant payments, we have already started using the ECB system for kroner-denominated instant payments. And then it's not technically hard to take a next step, moving into cross-border and cross-currency. Whether this will be a success or not, time will tell, but I do know that there are also other central banks interested in this multi-currency service. And if there are many participants, that means that potentially it will be possible using that type of a system or connecting many types of similar systems together to actually move money across the globe in a very quick and efficient way. But that, of course, requires coordination and cooperation and standardization. So this morning, I have touched on three key challenges when it comes to payment markets issues. And I do think that these three challenges that I have touched on, they warrant action on the side of the central banks. And I also mentioned a few of the initiatives that we are working on, and time will tell where that will take us. Given that on the Israeli side, you are technologically also very, very advanced, and given that you are looking into the same issues, I'm fully convinced that at your end, you have the capacity to do whatever you want and introduce whatever you want, and that will also be successful over time. And also, given the size of the system where I'm active, and given the size of the system where you, Governor Yaron, you are active, at both ends, we can do things a little bit faster than in economies where you have to deal with hundreds and hundreds of millions of people. And thank you.
Can you hear me? Yeah. Stefan, first of all, thank you so much for these enlightening words and thoughts. I'll ask, just because of time, maybe very few questions, it's clear what you've said about where you view cash is, and I think most central bankers think that they, as you said, have to show the road, and part of it lead the path, and part of it is the private sector. Yet you mentioned a whole bunch of initiatives, anyway, from linking to the ECB, while looking into the e-corona. A lot of these things have large fixed costs. You think the long run view is they'll all live side by side, or let's say instant payment will be taken over by CBDC, but in the meantime, that is just something that we got to go through? That is one question I have. And then you kind of hinted at your view on stable coins, using the before that. So that's fair enough, but can you say something about what do you think of in terms of how they are being, what's your thought in terms of being the regulatory aspect of that? And the last thing is regarding the interoperability, whether it's faster payment or CBDCs. We all are aware they have huge network effects. And the question here, as you mentioned, we are economies with roughly similar amount of population. But at the end of the day, a lot of the network effect will come from the big economies. And the question is, in terms of, does one have to kind of get, all the gains will come if and when those big players will be there to support the interoperability. So those are just 3 quick questions. If you have something to add to this, we'll be happy to hear.
Yeah, let me try to reflect a bit on these things. First of all, whether all these various ways of dealing with money will sort of run in parallel or not, or if one will dissipate and kind of be replaced by something else. It's of course very, very difficult to know. But if history gives us any guidance, and if we think about what happened in the 1800s, then basically all banks issued many banks in many parts of the world issued physical cash, and so did the central bank. And that was a complex debate in many countries before things settled down. I think that something similar will happen now. First of all, I do think that we still need cash, because cash is the best and safest backup system there is. And if things get difficult, and that could happen in any country, then if there is no way for the general public to deal with money, except in a digital format, then the general public would have to invent cash again. And that's not a good situation to be in. So one needs to keep banknotes in store, but one also needs to maintain the physical capability to actually transport and transact using cash. And I actually think that takes some kind of a legal framework to do it, because otherwise the private sector will move completely out of it. Now, to what extent then a CBDC will replace other means of payments? I don't think so, because if you look at physical cash relative to, let's say, bank deposits, it's just a tiny fraction of bank deposits. And I think that it will look like that in the future as well. But then mostly cash will be replaced by a CBDC. And also, having said that, some people actually don't want to hold private sector money, and some individuals are not really capable of transacting using new technological advanced means like cell phones and things like that. So most likely, at least for the foreseeable future, all these different initiatives will, in one form or the other, exist in parallel, and then with huge differences between countries. Because in some countries, you have a functioning financial sector. In other countries, and in many poorer countries, the central bank is the only functioning financial institution. And particularly in those countries, I think that a CBDC is likely to dominate. Now, stable coins, crypto assets, whatever you call them, here, I think that you really need to have a legal framework and be bold enough to actually define what we're talking about. And mostly, and this is why I use the word unstable coin, we're actually talking about either narrow banks or money market funds in one form or the other. And then one has to basically say that a spade is a spade. And either if you come to the conclusion that you're a bank, then you have to behave like a bank. Or if you're a money market fund, you've got to behave like a money market fund. And if you don't like that, you're going to have to close shop. And if that is not the case, then we actually run the risk of ending up with massive, absolutely massive regulatory arbitrage over time. And I think that would be a really bad outcome, because we do know, if history gives us any guidance, that elaborate private sector attempts to have people using private sector money and private sector money only tends to lead to disasters sooner or later in one form or the other. Because let's keep in mind that there's almost nothing new when it comes to money. Money is what we have in our heads. Money is not really about technology only. And in that sense, when technologies change, we tend to introduce old monies using the plural, but in a new sort of technological format. But that doesn't mean that the basics of money changes at all. And that's why we have to be careful when it comes to how we organize these systems. And when others claim that they have invented something which is wonderful and that no one has ever heard of before, well, in this field, that is usually wrong. One of the challenges we have when it comes to all of this is that one issue is technology. But technology does not define what money is. You actually need to have a legal framework defining what money is. And the combination of a legal framework with various technologies, that's where you actually will find the successes in the future.
Okay. Thank you, Stefan. I think I at least, and I'm sure the audience as well, you have a whole gigantic room here listening very carefully. Want to thank you for the time and all these insightful comments, and I'm sure we'll see each other in some conference soon, and maybe we'll continue some of this one-on-one. So thank you very, very much.
Thank you for giving the opportunity to talk to all of you. Thank you.